we've got a protest around the country that kind of died down a bit, but there's still the issue of the cost of living and how that crisis, is still sweeping through the country. How is that impacting, consumer goods companies in Nigeria? Let's take a look at three of them. Dangote Sugar, Nestle Nigeria, and Nigerian Brewery. So let's put the numbers up as we take a look at their second quarter figures for some of these entities. So Dangote Sugar, first off, revenue double digits, cost of sales, real big jump there. Gross profit dropping by 71%, loss before tax of 104 billion naira. That's for Dangote Sugar in the second quarter. We take a look at the stock performance as of 10:20 this morning. It was 37 naira 30 kobo, 1022. Year to date down by 37%, but 1 year return not up to 1%, but the 2 year 118. I think up next is Nestle as we take a look at their half year performance. Nestle, of course, been in the country for years and years. Revenue, double digits. Cost of sales also jumping. Gross profit, double digits. But you look at the loss before tax, 252 billion in the red is the loss for the half year for Nestle Nigeria. As far as their stock price, Nestle used to be above 1,000 naira. Now 830 naira per share as of 10:29 this morning. Year to date, 1 year return, 2 year, ouch, Nestle, ouch. We go to Nigerian breweries. This shouldn't be a surprise. The brewery sector has been struggling. Tolaram, of course, getting that majority stake in Guinness. So revenues, 63% growth, cost of sales jumping by 100%. 50 billion naira loss before tax for Nigerian breweries. And as far as the stock is concerned on the NGX, well, kind of similar to what we saw with Nestle. Ouch, ouch. 26 naira 40 kobo as of this morning. Year to date, 28% drop. 1 year, 2 year, similar situation. All right, as far as food, Customs is saying that within a week, they will start enforcing that tax waiver on imported food items, key food items. Comptroller General Bashir Adeni mentioned, he said it's part of the efforts to combat the nation's rising food inflation. So I'm very excited to speak with Felicia Awolope, who is a statistics graduate from the great UI. She is the investment research analyst at Meristem Securities Limited. I love talking to people in the stats region. It is great to have you, Felicia. Good morning. Good morning. The food matter, let's start with that before we get to the numbers. What do you make of this initiative to remove this import duties on some of these key food items? What do you think about
I would say it's a welcome development. There's been clamor for the federal government to do something about the rising cost of living that the Nigerian citizens have been facing. And this is just one of the things that the federal government thinks they can do to relieve the pressure. And you see that looking at Nigeria's inflation, it's more of cost pushed.
Right.
It comes from the fact that manufacturers, producers, they incur more costs to produce. And so they have to pass on some of these costs.
Look at those cost of sales for Dangote, Nestle, and Nigerian breweries. Yeah.
Also, so it means that if the federal government does this and waives these import duties, to an extent, the cost of importing, because Nigeria is an import-dependent country, so a lot of these producers import some materials, whether raw materials, whether packaging materials. So if they waive the import duty, it means a portion of the cost that is supposed to come on their production is going to be, absent. And that means that maybe profitability, maybe they don't have to pass on so much cost to consumers then.
Right. But look, Nigeria, prices go up like a rocket, they come down like a feather, as Nami said. Do you think, I think it's 150 days when they want to do this, right? Yes. From next week. Do you think could we see a noticeable change in prices coming down?
Well, I mean, in an ideal situation, you would expect that when cost reduces for these producers, we begin to see relief. But like you mentioned, in Nigeria, not just in Nigeria, actually, generally, prices are sticky downwards.
Right.
And so what we might see would be that maybe prices of these items would not be increasing by so much. For some of these items, we might actually see, a decline, a moderation in the price of some of these items. But I'm not, we should not expect that, general food prices will just begin to drop. There are other factors that could contribute to a moderation in food prices. I mean, the federal government is suspending these import duties for just 150 days, targeting the harvest season when we'll begin to see an increase in supply of food items. So, I mean, those are other factors that could support, and we might actually see moderation in food prices.
Excellent.
We might.
Hey, we'll see. We'll see how things work out. All right. So let's get to the numbers for some of these companies. Let's start with Dangote. Good. We have Dangote Sugar. We've got Nestle. We've got Nigerian Brewery. So we've got sugar, food, and drink, right? Although Nestle does some drinks too. All right. Starting with Dangote Sugar. Can you talk about the triggers behind that loss for the second quarter for the company? Yeah, 104 billion. Yeah.
I mean, not just Dangote Sugar, the consumer goods sector
as a whole, right,
has been facing, challenges.
Yeah.
But boiling it down to Dangote Sugar, their major raw material is sugar, and they import almost 100% of this sugar from Brazil.
Yeah.
So look at that. The exchange rate fluctuations is weighing heavily on their cost. If you look at the breakdown of their cost for H1, you'll see that the cost of raw materials, the prices of raw materials, all more than doubled. It increased by around 105%.
My word. Yeah.
And that means that, it means that even though revenue did not increase by 100%. That's to say that the growth, the increase in cost, it far outweighs the increase that you could see in revenue.
Yeah.
And then look at the fact that they have import facilities, they have letters of credit. So a constant valuation of these foreign currency balances just means that the country is exposed to, taking losses on foreign exchange depreciation, on the depreciation of the Naira to be exact. And that is what we've seen drive this performance that we saw for H1 2024.
On this sugar matter, I know the last administration had this backward integration program.
Sugar
master plan, right? Can't even remember. I think the new administration is going in that direction, try to keep that going. Why? It hasn't worked. Why?
Okay, so we would not be saying it hasn't worked.
Yeah.
We can't say it hasn't worked. First off, the timeline for the whole project, it's supposed to, they are targeting 2 million metric tons of sugar production in the economy by 2032. That's to say they still have time. There's a period of, this is sugar canes. There has to be planting before we even begin to see, proceeds. So there's a timeline for these things. And of course, it's Nigeria. Just the announcement of a policy or of a plan does not, it just doesn't translate to the implementation of these plans. There are bureaucracy challenges.
Red tape.
Yeah, you understand. And then there have been kickbacks, pushbacks from some of these communities when they want to, do the plantation of this, crop. And all of these things have been factors that have been delaying. But, there was an update around June that, they are trying to get into the second phase. And we hope that we see positive development from that side.
Well,
maybe in the midterm.
I think the best metric is these companies that are in there doing all that. Nestle. In fact, I said 1,000. There was a time Nestle's stock was 1,003, if I remember correctly, per share. Are we with their own 200 and what was it? 200. If we put the numbers up, 200 and no, this is the stock prices. And as far as Nestle's loss, I think it was 250. Was it 252? Yeah. So similar situation with Dangote Sugar. What's Nestle's challenge here with these big losses?
Okay, yeah, for Nestle, same goes for a lot of these consumer good companies. There's a fact that there is high inflationary pressures, which impacts operational costs and, of course, cost of production. But when you look at Nestle, because they import a lot of they locally source a lot of their raw materials, the impact on their cost of production will be from inflationary pressures. However, they have this huge exposure to FX in terms of their intercompany loan.
Right.
A loan from their parent company.
Right.
And so the constant revaluation of this loan means that they have to take foreign exchange losses too. If you look at their debt figures, you will see that their debt increased by around 250 billion.
The blood of Zeus. Are you serious?
and if you look at that increase,
wow,
exchange rates contributes to like 231 billion of that 250 billion.
So it's almost everything.
So you understand.
Yeah.
So it's not as if, maybe they took, more significant debt from their parent company, but just a revaluation of the existing, obligation means that, and when that increases, the finance cost is going to increase. And of course, they import some of their packaging materials. So basically, FX.
Yes. Well, Nigerian breweries, I think we all know the story with the brewery sector. We covered the Guinness headlines when Tolerant bought that majority stake. So our viewers should know what the story is, but just to, if we get to Nigerian breweries now, as far as their, tell us the story again.
The story
the breweries have struggled.
Yes.
Ah.
I mean, look at the fact that they have to import a lot of their raw materials, import their packaging materials. They have foreign currency denominated loans. They even have local loans with this high interest rate environment. So it's coming at them from a lot of sides, actually. It's coming at them. You look at their loss. I can tell you for a fact that for these companies, their foreign exchange losses, a lot of these companies will be in the green.
Wow. Yeah,
exactly. A lot of them will be in the green. Look at the figures. For Nigerian breweries, if you remove the impact of foreign exchange on their raw materials, on their finance costs, on their foreign exchange losses, if you remove the impact of all this, you would actually see that a lot of these companies will still be profitable, even with the high inflation environment. But when the factor, which is FX, which is the major issue in the Nigerian economy, when it comes in, a lot of them just, there's only so much they can do. But I mean, we're expecting them. We've seen different companies come out with plans to adapt, to the
shrinkflation by reducing the amount of the products, and is that one of the strategies?
To just to adapt to this current business environment. For Nigerian breweries, they've stated that they want to raise around 600 billion naira, and they want to use this to pay down some of their foreign currency denominated loans, so that they are curbing and they are shielding themselves from that exposure to FX. If they don't have so much debt in foreign currency, that means the depreciation of the naira will not impact them so much, at least on the debt side. You understand? And that's what we are seeing. We're seeing some of these companies. Guinness has indicated that they want to, aggressively pay down their foreign currency obligations just to make sure that they are not so exposed to this FX depreciation.
Are you in the camp that feels inflation is going to peak based on base effects, and that if that was to happen, we've mostly talked about FX, but then there's the FX pass-through effect into inflation. So if inflation is going to peak, does that help things, ease things to some of these companies?
I mean, when we see inflation peak, it means that we're not seeing the increases be as rapid as we've seen. We don't just expect that inflationary pressures will disappear.
Right.
It's still a process. Of course, we've been seeing the CBN trying to maintain stability in the FX, in the FX area, and more stability would actually mean less pressure for this company. Take a look at the numbers. You would see that for these H1 figures, the bulk of these foreign exchange losses came from Q1, when there was much volatility in the FX market. The relatively stable FX that we've seen, the depreciation in the Naira in Q2 was, less than 20% compared to Q1 when it was like 30-something percent. So the relatively stability that we've seen in the FX market actually means less pressure for these consumer good companies. And I mean, it's going to be a good thing if we could actually see the Naira maybe appreciate. It would help things for them, but I don't know how soon we'll be seeing that.
I mean, we're at 1,600 levels now, right? From 1,001, although to be fair, we're at 1,008, then 1, then back up to 6. What about the NGX and the consumer goods sector? Does one make any, do you buy into the stocks because they've been beaten down so much, or do you stay back and say, wait till they make a recovery? What's your outlook for the share prices of these companies?
Investors buying into different positions for different reasons. I would say if you're looking at the long-term objective, if your objective is to, get stocks that are fundamentally sound, that you feel like they are sustainable, they would, operations will continue, they'll continue to be strong. You can look at some of these stocks. I would tell you for a fact that some of these stocks they've been operating in Nigeria for decades. And it just says, it speaks to the fact that they are strong in Nigeria. They've been able to acquire market share. They have, very robust distribution networks and all that. But if it's for a short-term objective, we don't expect them to come out of the woods maybe in the near term, maybe in the next 3 months or so. But if it's for a long-term objective, these stocks would bounce back. You see these companies maybe go back to profitability by the time our FX situation is resolved. And of course, maybe even before then, depends on how much these companies are able to implement policies that helps them adapt to the current business environment better. So for some of these stocks, they are solid stocks, they are, good fundamentally. It would just, depend on the objective of the investor. How long do you want to take this position for? And that's what would determine if we'll be advising that you take up some of the stocks or you just wait and see.
Fantastic stuff. Felicia Awolope, investment research analyst at Meristem Securities and Debt. Thank you so much for the deep dive into Nigeria's consumer goods sector. We'll see how things work out. Appreciate your time.